my God, we're finally there. The banks are in trouble. The insurance companies are in trouble. The bond market's in trouble. The stock market's in trouble. Real estate's in trouble. Where do you go? And I think people are realizing this, and what's happening, that are buying gold and silver as a life raft. And that's the way that I look at it, but not just for an emergency, right? If you would have told me that we would be at nearly $3,800 on gold, it's just beginning, in my opinion.
The public is all in. Record debt, record speculation, and record risk. Yet the insiders are quietly heading for the exits. Behind the scenes, vaults are being emptied of gold and silver, premiums are exploding, and the world's wealthiest investors are moving their fortunes into assets most people still ignore. In his most explosive interview yet, Andy Schectman, CEO of Miles Franklin, reveals the hidden moves of the ultra-rich, why they're preparing for a massive shift in the global monetary system, and why this time, it might not be a cycle at all, but the end of one era and the birth of another. What does he know that the rest of the world doesn't? Stay tuned, because once you hear this, you'll never look at money the same way again.
I was a very young man at that time, and gold just forever was between $250 and $375, $80. And just like we see right now with, when the market was trying to break through 2,000 in gold, or when silver is trying to, break through 44, it keeps coming up, and it would just bang its head against that resistance. And I remember it finally breaking through 400, thinking, my goodness, here we are at $400, and then it broke 850. Oh my God, we're finally there. We're finally at all-time highs. And if you would have told me that we would be at nearly $3,800 on gold, and really no one hears about it, you rarely see it. Yeah, you see it on the ticker a little bit on CNBC or Fox, but it's not discussed. Jim Cramer, this idiot, just comes out and makes a tweet saying, I just wish we'd stop seeing all of this, irrational speculation in gold. And I'm thinking, you're just a moron. Where have you been the whole way? And is it irrational, or is owning stocks at the highest level of valuation ever, with the largest allocation of the retail public ever, and the largest margin participation by the public ever, and the largest option participation by the public ever, as the inside money is going the other way? I mean, the guy's just an idiot, but this is why people don't get it, because unless you're spending time watching Liberty and Finance or Miles Franklin or Peter Schiff or any of the people out there that are doing this work, Vince Lancy, I mean, there's so many good ones. I don't mean to disrespect anyone by not saying Gregory Manarino. I mean, the list goes on and on and on. And if you're not paying attention, you don't see this. You don't get it. You don't know it. You may hear this, and then you may go try and buy a necklace for your wife or your girlfriend's, anniversary or whatever. You realize, wow, gold's expensive right now. But people at large don't understand it. They don't view it. It's become so removed from the collective conscious of the public. And so, yeah, I mean, the big money is waking up to it, no question. And when I say big money, I think there's a duty when you have that kind of money to think. And I'll tell you that, and I'm serious about this. Where do you put your money at a certain point is very difficult, right? You got interest rates that on the short term, the very short term interest rates, which are coming down. I think you'll see the opposite on the 10-year. Will move the other direction, just like it did before, just like we see in London, where they've lowered rates 7 or 8 times, and yet their 30-year treasury is pretty darn well near its all-time high. The bond market controls the back end, but I wouldn't buy the back end anyway. I would own some 6-month treasuries or shorter duration, and those are coming down. Where do you put your money when inflation, the real level of inflation, is far greater than the interest that you're receiving for something as safe and liquid as a treasury? What happens if Trump gets his way and they lower rates 200 basis points to 2%? And the CPI, which is at 3.1% right now, is actually higher than the rate that is stated. Big money won't stand for that. We know that the CPI, because you've had John Williams on this show, will tell you it's 11% right now. Add an 8 to it, the way it used to be measured before they changed it. Point of it is where do you put your money? Stocks at all-time highs, bonds at not quite all-time highs, but losing demand rapidly. So much so you create something called the Genius Act, which it is kind of diabolically genius, to create synthetic demand for U.S. treasuries because the organic demand is waning. Where do you put it? You put it in real estate at all-time highs. You put it in banks that are over-leveraged and undercapitalized, where you are now a unsecured general creditor with bail-in laws. So, yeah, I mean, I think there will come a moment where the public at large realizes this, but the big money is asking these questions every day. What do I do with all this money? And no one would have ever thought that having that kind of wealth would be such a pain in the ass, such a difficult thing to safeguard. And as you get older, you're more concerned about protecting than you are making, because, you know, you're thinking of your children and your grandchildren and how do I pass it on appropriately. Interest rates spike in an environment where there's that black swan. Well, the banks are in trouble. The insurance companies are in trouble. The bond market's in trouble. The stock market's in trouble. Real estate's in trouble. Where do you go? And I think people are realizing this. And, you know, it's kind of a softball question for a guy that owns a precious metals company. But if people haven't figured out by now that I try to be as genuine as humanly possible, that I do as I say, they never will believe me. I will just simply say, to me, there are very few places where I think you can safely keep your money with a high degree of liquidity, where the biggest money in the world is showing you through their actions where they're going. And I think you will see that public catch on. But typically, the big money, well, they do this in the cover of darkness, where you got guys like, Jim Cramer, moron, saying, it's too speculative, it's frothy. They're not looking at this the right way, and they're not really part of it. But there are a lot of people who are clued in and understand where we're going and what's happening, that are buying gold and silver as a life raft. And that's the way that I look at it, but not just for an emergency, right? It's for an opportunity as well. And maybe having that dry powder in the form of something that is keeping its purchasing power against a dollar that's down 11% this year and gold up over 40, it's keeping its purchase. You go back as far as you want, and I can make this analogy in real estate and in anything. Gold maintains its purchasing power, and most other items across the board, from food to energy to real estate, measured in gold, it's becoming cheaper and cheaper and cheaper as things measured in dollars are becoming more and more and more and more expensive. You can pick anything you want. Automobiles, college tuition, and I have an answer for it. And that's the scary thing. I wrote one thing down to kind of show that it just kind of caught my attention. And it's just very simple. In 1978, a student working full-time summer job at the minimum wage of $2.65 an hour could earn roughly $1,378, which was more than enough to cover the average tuition and fees of $688 at a public university. So when you talk about inflation outpacing standard of living, it's extraordinary. But if you look at gold at its value since 1978, when it would have been priced at, I don't know what it was back then, a few $100s anyway. But point of it is that, look at where gold is today from where it was then. In fact, let's just look real quick just to make the point. We'll see where gold was in 1978. What was average gold price in 78? Was $193.4. So if you are earning minimum wage and you're able to make, what did they say, 1,378. So 1,378 divided by 193.4. Well, you would have bought 7 ounces of gold with your minimum wage summer job that today would be worth $26,000. So that would cover your tuition in most public schools. A lot of the highfalutin ones are going to be 3 times that, because college is probably a poor example showing how much it's outpaced itself. But point of it is that, what is $1,100 worth in fiat versus in this term. I just think it's important to understand that gold and silver have done a wonderful job in the face of a dollar that is destined to continue to lose purchasing power and probably accelerate, because that's the whole premise of what they're trying to do, not only of what Trump wants to do, but Stephen Murin, who's now on the Fed and the architect of the Mar-a-Lago Accord, which speaks of a weaker dollar to stimulate and bring back manufacturing. So saving in dollars are destined to go broke, period. Well, business has gotten really busy lately. But busy, I would argue, with much more well-heeled investors that are getting concerned. It's easier to make money than it is to keep it. And I think a lot of people who have, maybe they're getting towards the twilight of either their career or of their lives, and they're looking at things that are unfolding here. There's a very deep interest all of a sudden, but to your point, the public is still largely anesthetized when it comes to the merits. I've talked, and I'll get to your question on the premiums, but I've talked at length with people like your father over the last few weeks, where we see all-time high participation in the stock market at about 55% by the public, highest ever. Higher than the 1929 peak, higher than the .com anytime. And along that same lines, you have the highest participation of the retail crowd in options ever, which is speculation, and the highest margin debt, over $1 trillion ever, which is leverage. So the public is all in on speculation and all in on leverage, as the insiders, Warren Buffett sitting on $500 billion in cash, Bezos selling $7 billion in Amazon since June 1st. The insiders at NVIDIA dumping shares, the board members, the insiders, Jamie Dimon, all of these people selling stocks, Zuckerberg, the insiders are selling at a 7-to-1 clip. The institutionals have been selling between $2 and $4 billion a week since June. And so you have the insiders with the information leaving, and the public all in on leverage and margin and speculation. And then the other end, you have deliveries coming into COMEX that no one has ever seen before. At the same time, the public has zero exposure to it. So you talk about a contrarian indicator on both sides. It's enormous. The premium thing is the strangest thing I've ever seen in my career. You're right. The Eagles are going up, both gold and silver. The U.S. Mint hasn't made any platinum Eagles in at least 2-3 years. None this year. We'll see if they make them next year. The rumor is they're not. Platinum is very similar to gold in terms, in my mind, of its manipulation, its setup. You have the head of the Japanese Tokyo, the TOCOM, Tokyo Commodity Exchange, who says, look, London is trading 3 million ounces a day of spot contracts, deliverable platinum contracts, but there's no platinum in the vaults in London or Switzerland to deliver. You look at the chart that Ed Steer, that your dad has showed about Ed Steer, the shorting on COMEX, it's silver number 1, platinum number 2. There's a lot of value in platinum, but the spreads are high because the availability of product is low. It's a strange time, and maybe the reason you're seeing the Eagles go up is that when a lot of the new clients that we have, the big orders that we are doing, the people want gold and silver Eagles. There's a certain level of comfort for a lot of people. You have, as we've talked about at length, 11 states already that recognize precious metals, many of which is specifically gold and silver Eagles, as legal tender, and the U.S. Mint can't keep up. So the primary distributors who buy all of the large shipments from the mints, when the mints run out of product, the primary distributors now become the de facto market makers, and it's a function of supply and or demand. Spreads are very high right now because the price is getting higher. I remember, just a few years ago, even with $1,500 gold, you're talking $30,000 for a tube of Silver Eagles. Now they're almost $80,000. And so cost of inventory is getting higher. Our premiums are going higher. And there's volatility that we expect to see based upon what we have seen for a very long time. But maybe the rules are being rewritten. Maybe things are changing. Maybe the government, for once, is going to let the price go higher instead of stepping on it through levered futures contracts. Maybe this has a lot to do with all the metal coming back, the reclassification of silver as strategic or critical, all of the talk of gold being woven into the back end of the treasury market. He who has the gold makes the rules, says Trump. There are a lot of reasons to think that maybe this time is different. Now, usually when you hear that, you should run. This time is different. But I will say it does feel different. Ultimately, we'll have to see how it plays out, but I don't ever remember in all of my years doing this, Elijah, which is almost 36, seeing a market with this continual strength, and every time it's hit, it just comes right back. That is a characteristic that is certainly new, and feels like, they're just going to let it go much higher, in particular with gold, making the revaluation at some point much easier, and increasing the value of the holdings that they have. And if they really are going to revalue it, like a lot of people talk about, myself included, James Rickards, Mike Maloney, the Federal Reserve, Senator Lummis from Wyoming, keep on going on, Judy Shelton, if they do, starting from a much higher peak or plateau, from a much higher base, would be beneficial to them. And when you see banks saying, okay, now it's 4, now it's 5, now it's 6, they keep on raising their targets, which is interesting. And I don't know. I think, honestly, that this system needs to go back to some form of truth, some form of credibility, some form of trust, because what we have right now is really failing on all of those accounts, not to mention fiscal irresponsibility. We talk about, August being a huge month for tariffs, like 85 billion, yet the deficit for the month was 350 billion. So our spending is out of control. Our reputation is maybe irrevocably damaged. And the biggest money in the world is showing you, whether it be the central banks around the globe or now the institutional traders here in the United States, or whoever the hell it is bringing in billions a week in gold and silver into COMEX, that these metals are far more important than the currency that is being used and conjured up to purchase it. And honest to God, in my soul, I feel like this is just the beginning. I guess we'll see. And I want people to know, I never tell you to buy metal to get wealthy. It is wealth. And that's what I think we are seeing. It's going back to its historical placeholder of wealth. And yeah, you own enough, you will be wealthy. You don't buy it to get wealthy. I think you have that opportunity with silver, but I would never tell someone to do it for that. If you buy it for the right reasons, because the system is dying and it is sick, it is diseased, and the biggest money in the world, who knows the playbook, is showing you that this is a very significant part of their path to the other side. So yeah, I think that is what's driving it, and premiums will go higher. When you listen to what Rick Rule says, 0.5% allocation, right? Getting product, if you get to a 5% allocation of the retail public, of Joe and Jane Sick, he always would say something interesting, Elijah. He would say exactly 0.5% allocation in precious metals and precious metals equities from Joe and Jane six-pack to the Harvard Endowment Fund. But what did we just see a few weeks ago? The Harvard Endowment Fund buys, over $100 million worth of gold, I think was the number. So things are changing. Institutions are embracing. Big money is waking up, and so too will the public. Of course, it'll be far too late for most people because they move after the big money is fully positioned. We're watching the big money get positioned on COMEX and all the deliveries off of the world's exchanges, including the COMEX. A lot is being stuffed in there by big money, but a lot's leaving too. We don't talk about that enough. Where's it going? Who's taking it? It's just beginning, in my opinion.
Andy Schectman has made it clear. The world's financial system is shifting right in front of us, and those who wait until it's obvious will already be too late. The insiders aren't guessing. They're acting. The question is, will you be prepared or will you be caught off guard when this reset takes hold? If you found this eye-opening, make sure you hit that follow button, because in the next video, we're uncovering even more of what the mainstream won't tell you. Stay alert, stay prepared. The story is only just beginning.